Hello, and this is Bernadette with By the Book Accounting coming to you with a quick video on explaining itemized deductions. I get these questions all the time when clients are preparing their documents or wanting to know what information to keep or keep track of for the tax preparation. So hopefully this helps you to understand what itemized deductions are. When you're filing your taxes, you either get to do what's called itemized or take the standard deduction. And we'll talk more about that in a little bit, but it's usually best to take the one that's the highest because this is what decreases your taxable income. So let's talk about the standard deduction. So when you file your 2015 tax return, the standard deduction is going to be based on your filing status. If your filing status is single or married filing separately, that's what MSFS is, then your standard deduction is $6,300. If you're filing head of household, then your standard deduction is $9,250. Married filing jointly, or if you're a qualified widow, we'll talk about that in another video, your standard deduction is 12,600. So what this means is if your itemized deductions are total up to less than these amounts, depending on your filing status, then you would take the standard deduction versus itemizing. So let's talk about itemizing. Some of the commonly used itemized deductions are taxes, interest, contributions, and medical expenses. There are some others that are not so common, but I like to talk about the common ones because these are the ones that happen most often. So when you talk about taxes, typically you need to be a homeowner to pay property taxes on a home. Property taxes on a vehicle or a boat. Some states charge what's called an ad valorem tax, which is a tax that is based on the value of either the vehicle or the boat. So if you pay an ad valorem tax in your state, then you would be able to deduct the property taxes, or it falls into this category. Also, if you live in a state that charges income taxes, then you can deduct the income taxes that you pay. So those are all of the taxes that you can deduct as itemized deductions. Then you have interest on your home. So the mortgage interest, if you're paying PMI, if you've paid points, like say for instance, if you closed or refinanced, you can deduct those under your interest. Contributions, cash contributions to a nonprofit or religious organization. Let me say this about cash contributions. It's a good thing to either write a check to the organization, or a lot of them are now taking debit and credit cards, using a debit or a credit card so that you have documentation for your contributions. A lot of people say, oh, I just put cash in a collection plate on Sunday, and that's not always a good idea, especially if you are a generous giver and you give a lot. So you want to make sure that you do things so that you can have a tracking of your contributions. Many churches allow members to put their contributions in envelopes, and then they can provide a statement at the end of the year. That's a secondary thing. But a lot of times, if you're ever audited, the state or the IRS will want to see bank documentations for large contributions. So keep that in mind. Non-cash contributions, and this is when you donate stuff. So if you donate clothes, if you donate a car, if you donate furniture, all of these contributions are also deductible. Keep in mind that if these contributions exceed $500, you need to have an itemization of what you've donated. So you need to say this itemization needs to include the date of the donation, the organization that received the donation, the items that were donated, and the value of those items, as well as how the value was determined. And so if it was determined by fair market value, or if it's something that if you were doing comparable sales or thrift store value, whatever the case may be. And then we have medical expenses. Ooh, I get this one a lot. Medical expenses includes, of course, copays to the doctor, copays for prescriptions, your dental expenses, eyeglasses, contacts, any other medical expenses. If you have to do co-insurance, some insurances require you to pay a portion and then they pay a portion. Any payments like that it all is considered medical expenses. Now, your healthcare premiums are more than likely not included in this, because if your healthcare premiums are being deducted from your paycheck for your employer, those are pre-tax deductions and you're already getting the benefit of that deduction. So don't include it with these. If you're self-employed and you pay your own health insurance, we'll deduct that somewhere else on your tax return. So again, don't include your healthcare premiums in this number. You can also deduct medical miles. So if you keep track of the miles, if you have to go back and forth to the doctor or to the pharmacy a lot, you may want to keep a mileage log and keep track of your miles, because you get 23.5 cents per mile. And these are the 2015 numbers. They may change depending on when you listen to this, watch this video. You're also, now the way the medical expenses work, you can deduct the amount that exceeds 10% of your adjusted gross income. So if your adjusted gross income is $50,000 and you have $6,000 in medical expenses, you'll get to deduct $1,000, because 10% of 50,000 is $5,000. You have $6,000 in medical expenses, you deduct the $5,000 ceiling, so to speak, and so your medical deduction is $1,000. So what this tells you is, if you only go to the doctor for checkups and you caught like 2 colds last year, chances are you will not have enough to itemize your medical expenses. Typically, the clients that I have seen who have been able to use medical expenses are like elderly people, unfortunately, who go to the doctor a lot and their income is low. Maybe they're on a fixed income or they get a pension. So their income is low, their adjusted gross income ceiling is low. And so when they accumulate a great deal of medical expenses, it's deductible. Also, if you had like a major procedure, some people had like major surgery and they had a high deductible medical insurance plan or something like that. But the typical healthy average American does not usually get to deduct medical expenses, because you just have to have so much in order for it to be deductible. So I hope this video helped you to understand itemized deductions. Please subscribe to our channel, like this video, give us a comment. I'd love to hear from you. And let me know if there's any other videos that you'd like to know something about. Thanks again. It's Bernadette at By the Book Accounting.